Hey everyone, and welcome to another deep dive. Today we're heading to the African continent. We're talking fintech.
Yeah, and get this, we're talking about a sector that's projected to grow 8 times larger by 2025. I mean, to put that into perspective, that's like adding the entire GDP of Nigeria to the continent's fintech sector. And the best part is this isn't just about the money, it's about social impact.
What I find fascinating is how this isn't about fancy apps or some Silicon Valley trend. We're talking about bringing financial services to millions of people who've never had them before. Imagine a world where a farmer, let's say in rural Kenya, can access microloans straight from their phone, or a small business owner in Senegal can manage all their inventory and payments digitally. That's the kind of power fintech has in Africa. Yeah. Okay, so we're talking huge EE impact, like transforming the entire financial landscape. But this report, Fintech in Africa, The End of the Beginning by McKinsey & Company, makes a really interesting point. It says that while the potential is, obviously enormous, this boom also comes with its fair share of challenges.
Yeah, you're right. And one of the biggest hurdles is just the sheer diversity of the African market. We can't simply copy and paste solutions that worked in other parts of the world and expect them to work here. Every single country has a different regulatory landscape, different levels of financial inclusion, and even their own cultural nuances when it comes to money and finance.
It's like trying to solve a puzzle where all the pieces are different shapes and sizes. So where do we even begin to unpack all of this?
Well, for starters, we have to ditch this idea of Africa as a single market, right? It's a continent made up of 54 countries, each with its own set of opportunities and challenges. This report actually breaks them down into 4 main archetypes. So you've got your traditional banking countries, like South Africa and Morocco, for instance. These countries have well-established banking systems, but for some reason, mobile payments haven't really taken off like we've seen in other parts of Africa.
So it's almost like they're starting from a totally different starting line than other countries where, mobile money is already king.
Exactly, and that's what makes the mobile money specialists so interesting to observe. These are countries like Kenya, Tanzania, Ghana, Uganda, places where using your phone as your bank is way more common than having a traditional bank account. Think about that for a second. In some of these countries, people have basically bypassed that whole traditional banking system and gone straight to mobile banking.
Wow. It's like they completely skipped a chapter in the financial playbook.
Yeah.
So I'm curious, what does that mean for fintech companies that are trying to break into those markets? Do they even need to bother with those traditional banking services?
That's a really good question, and it's definitely something we'll unpack a bit later in this deep dive. But for now, I think it's safe to say that really understanding these archetypes is super important for any fintech company that's hoping to succeed in Africa. They have to tailor their approach based on the specific market that they're targeting, or else they'll fail.
Right. It's definitely not a one-size-fits-all situation here.
Yeah.
Now, I want to talk about the winning strategies that you mentioned. This McKinsey report highlights how the African fintech companies that are finding the most success all seem to have a few key traits in common. It's like they've all cracked the code. Can you give us a sneak peek into what makes these companies stand out?
Absolutely. One of the most interesting things about them is that they're incredibly customer-centric. They spend so much time and energy making sure they really understand the needs and pain points of their target audiences, and they're not afraid to get really creative with their solutions.
Okay, I like that.
For example, instead of just relying solely on digital channels, lots of fintechs are now building these vast networks of agents. Basically, these agents act as middlemen, connecting people who don't have easy access to banks or even bank accounts to the digital financial world. Think of them like little local hubs for financial services.
Like bringing the bank to the people rather than forcing people to go to the bank.
Exactly. And this highlights another key characteristic of these successful companies. They're super adaptable. They're not afraid to blur the lines between what we think of as the online world and the offline world. They understand that for many people in Africa, cash is still king, so they have to find ways to work within that system.
It's like they're building a bridge between two totally different realities, right?
Yeah.
You have this huge surge in digital innovation, but the physical world still matters so much.
Precisely. It's about meeting people where they are, and recognizing that this whole journey toward financial inclusion isn't a straight line. Another crucial thing they've mastered is navigating the often very complicated regulatory landscape.
Oh, I bet that's a nightmare.
It definitely can be. But the fintechs that are finding the most success, they don't shy away from engaging with regulators at all. They see it as a way to help shape the future of their industry and as a way to build trust not just with the government, but with their consumers as well.
So it's much more about collaboration over disruption.
Exactly. It's all about working together to create a much more inclusive and honestly much more sustainable financial ecosystem.
So we've got this customer-centric approach, incredible adaptability, and this spirit of collaboration. Are there any other secret ingredients in this recipe for success?
Well, one that I think is super important but often gets overlooked is the importance of strong partnerships. And I'm not just talking about partnerships with other fintech companies. I'm talking about partnerships with traditional banks, telecom companies, even retailers. These kinds of partnerships allow fintech companies to leverage infrastructure that already exists so they can reach new customer segments and scale up their operations much more quickly.
It's like they're building a bridge between the old and the new. And in the process, they're creating a much more integrated financial system.
Exactly. And that's where things get really interesting because it really challenges that traditional idea of just complete disruption. Instead of just focusing on trying to replace all of the big players, these fintech companies are finding ways to work with them and coexist, which ultimately creates a more dynamic and competitive market for everybody.
Now that is fascinating. It sounds like there's a lot more to this African fintech boom than we might realize at first glance.
Right.
We've talked about the incredible potential for growth, the unique challenges, and some of those winning strategies that are setting these companies apart. But I really want to dig into those specific hurdles that they face as well. The report mentioned things like reaching profitability and, attracting top talent.
Mhm.
How are these companies dealing with those very real challenges?
Oh, for sure. Those are definitely some of the biggest pain points, and they're definitely not unique to Africa. But they definitely play out differently against the backdrop of these emerging markets. Let's take profitability, for example.
Yeah, with so much emphasis on reaching people who are unbanked, it has to be a real balancing act between, social impact and financial sustainability.
Absolutely. And it's definitely something that a lot of companies are struggling with right now. You have to remember that acquiring new customers in these markets can be expensive. Disposable incomes might be lower, and there's just a ton of competition out there. And it's not just competition from other fintechs. Those well-established banks are still very much in the game.
It's interesting how even with all of this innovation, those traditional banks just refuse to go down without a fight.
They really don't. And in many cases, you'll see them actually partnering with the fintech companies to take advantage of their tech. It's a much more complex landscape than we often give it credit for.
Right, it's definitely more like a dance than a fight to the death. So how are these fintechs managing to stay afloat with so much competition?
Well, they have to get really creative. For starters, they're super strategic about how they get new customers in the door. Many of them are using really aggressive pricing strategies. Some even offer their services completely free at the beginning just to get people to sign up.
That sounds kind of risky though, right?
It can be. But the idea is if you can get enough people using your platform and build trust, it'll pay off eventually.
So it's all about playing the long game.
Exactly. Imagine like launching a new microloan platform when you know that a lot of your potential users live on less than $5 a day. Figuring out how to make that work financially. That's the challenge so many of these fintech companies face. Some of them are trying to branch out by offering multiple services, almost creating like their own little financial ecosystems within their platforms. And then others are focusing more on those business to business relationships, providing services to merchants and other businesses. It's almost like they become the backbone of the digital economy.
So it's all about diversifying their revenue streams, finding creative ways to monetize that user base.
Yeah.
But what about the whole talent aspect? I imagine finding and keeping talented workers in such a rapidly changing industry has got to be difficult.
It really is. It's a double-edged sword, honestly. On the one hand, Africa has this incredibly young, tech-savvy population, which is amazing. But at the same time, there's a global fight for talent going on, and many skilled workers are drawn to those opportunities in more developed economies.
So how can African fintech companies even compete? Is it just about offering big salaries, or is there more to it?
It goes way beyond salary. It's about creating a work culture that attracts top talent and makes them want to stay. Many of these companies offer things like equity in the company, really flexible work arrangements, and lots of professional development opportunities. But maybe even more importantly, they're tapping into a sense of purpose that really resonates with, especially young Africans.
I can see that. There's got to be something really appealing about building something new, something that has the potential to transform so many lives.
Absolutely. A lot of these companies are tackling real-world problems, financial inclusion, access to healthcare, even climate change. And that's really motivating for a lot of people, particularly young and talented people who really want to make a difference.
Okay, so we've covered a lot. We've talked about this explosive growth, those unique challenges, the winning strategies, the hurdles they have to overcome. Now, I want to zoom in on those 11 key markets that you mentioned earlier. I'm curious to see how all of this is actually playing out.
That's where things get really interesting. Each of these markets is kind of like its own planet, each with its own character and stage of development. It's like watching this continent-wide experiment play out in real time. Remember those archetypes we talked about before? Well, they really come to life when you start looking at these specific markets.
Okay, you got me hooked. Let's dive in.
All right, so let's start with those traditional banking countries like South Africa or Morocco. These are places that have, pretty established financial systems already in place.
Mhm.
But for whatever reason, mobile money just hasn't really taken off in the same way it has in other parts of Africa.
Right, it's like they follow that same path of like checking accounts and credit cards, that sort of thing.
Yeah.
So what's the fintech angle here? Are they just like playing catch up at this point?
Not at all. They've carved out their own path. Think about it this way. In a market where you already have a solid banking infrastructure in place, it means there's a framework already there for things like lending regulations and credit scoring, right? Fintechs in these markets are really good at taking advantage of that existing foundation and then offering much more specialized services on top of it. So you see a lot of innovation in areas like business lending or wealth management tools for this growing middle class, and even what they're calling insurtech, which is basically using tech to make insurance more affordable and accessible.
So it's less about bringing people into the financial system for the first time and more about making the existing system better, more efficient.
Yeah, exactly. They're going after a completely different type of customer, someone who's already comfortable with like traditional banking, but is looking for something a bit more, I don't know, sophisticated, more digitally driven. Now, compare that to those mobile money specialists like Kenya, Tanzania, Ghana, Uganda.
Where using your phone as your bank is practically second nature at this point.
Precisely. These are markets where mobile money is everywhere. It's huge, often even bigger than traditional banking. We're talking about people who can buy groceries, send money to family, even get loans, all through their phone.
It's honestly pretty mind-blowing when you really think about it. That must create a totally different environment for fintech innovation, right? What kind of unique stuff are we seeing in those markets?
Oh, you name it, they're doing it. Things like microinsurance products that are specifically designed for farmers, or pay-as-you-go financing for solar energy, even platforms that help small-time traders keep track of all their inventory and cash flow digitally. It's really about taking that foundation of mobile money and building an entire financial ecosystem on top of it.
So we've got two very different landscapes, each with its own like pros and cons. What about the markets that fall somewhere in between? The report calls them disrupted markets, if I remember correctly.
You got it. And Nigeria and Egypt are perfect examples. These are massive, complex economies that have this mix of, that traditional banking infrastructure. But then at the same time, a huge part of the population is still underserved when it comes to financial services.
So a little bit of both worlds.
Exactly. They're straddling the line. You have this really significant unbanked population that's desperate for access to even the most basic financial services, which is a huge opportunity for these mobile money and digital banking solutions.
Right, so you get that same push to bring new users into the fold, just like in those mobile money specialist countries. But what makes these disrupted markets different?
Well, what's really interesting about them is you also have a pretty large chunk of the population that's already plugged into that traditional banking system. But they're hungry for something different, something more innovative and efficient. Think about like the pain points of dealing with a traditional bank, right? Long lines, slow transaction times, limited access to credit. Fintechs in these markets are really good at honing in on those pain points. And often they're actually partnering with those very same institutions that, in theory, they're supposed to be disrupting.
So it's this weird balancing act of trying to serve those unbanked populations while also appealing to these like tech-savvy customers who are used to a certain level of convenience.
Exactly. It's tricky for sure, but the payoff could be enormous. And then finally, you've got those crossroads markets like Cote d'Ivoire, Cameroon, Senegal. These are markets where mobile money is still in its early stages, but things are changing really quickly.
So like the Wild West of African fintech.
Haha, in a way, yeah. It's super unpredictable. There's a lot of experimentation happening and a high tolerance for risk. For these fintech companies, it's a chance to get in on the ground floor and potentially shape the entire future of the market.
But I bet it comes with a whole other set of headaches, right? I mean, trying to navigate a market that's still figuring itself out can't be easy.
Oh, definitely not. You're dealing with regulations that are constantly changing, limitations in infrastructure, and then you've got a whole consumer base that's still getting used to the whole idea of digital financial services. It really takes a specific kind of company to succeed here. Adaptability, deep understanding of the local market, and this willingness to constantly iterate and learn from their mistakes.
It's incredible how diverse the African fintech landscape really is. We've got those more mature markets, the mobile-first markets, and then everything in between. But one theme that seems to keep popping up is this need for collaboration, right? This McKinsey report really hammers home that point about how African startups need to become more like African businesses. What do you think that even means in the context of this fintech boom? Is it about finding that sweet spot between like local relevance and these global ambitions?
You hit the nail on the head with that one, and it really gets to the heart of what makes the African fintech scene so fascinating to watch. This whole idea of African businesses, it's multifaceted, right? It means recognizing that if you're going to try to build something for the African market, it has to be grounded in a deep understanding of the local needs and challenges that those consumers face. It's about earning the trust of people who might not have had the best experiences with traditional financial institutions or might just be unfamiliar with the technology.
So you can't just take these Silicon Valley solutions and drop them into Africa and expect them to magically work.
Exactly. It just doesn't work that way. It's about taking those global innovations and adapting them to the African context. Whether that's offering your services in local languages, partnering with businesses that are already embedded in those communities, or just designing products with the specific needs of the African consumer in mind.
It's about making sure technology works for the people, not the other way around.
Exactly. But it's also about recognizing the incredible talent and entrepreneurial spirit that already exists in Africa. For so long, the narrative has been all about foreign investment and these outside solutions. But what's happening now is totally different. We're seeing this new generation of African entrepreneurs who are building companies for Africa by Africa.
And that's where the idea of sustainable growth comes into play, right? It's not just about chasing after the next big unicorn company, but about building businesses that will last and benefit everyone.
Absolutely. It's about creating companies that create jobs, build wealth locally, and contribute to the continent's overall economic development. And that requires a different mindset entirely, one that prioritizes that long-term sustainability and impact over those short-term gains.
So it's about more than just shaking up the financial sector. It's about completely disrupting the way we even think about business and development in Africa.
Exactly. It's recognizing that Africa isn't just another market to exploit, but this place with its own unique strengths, talents, and incredible potential.
It's honestly pretty inspiring to think about the kind of impact this could have, not just on Africa, but on a global scale.
Yeah.
Like we're watching this whole new model for innovation and development being built right in front of our eyes.
Yeah.
And it's not just about the tech itself, it's about empowering people.
Yeah, exactly. And it's about challenging those old power structures that have always kind of left African countries on the outside looking in when it comes to the global economy. This whole rise of African fintech, I think, has the potential to flip the script and create a financial system that actually works for everyone.
That's a powerful vision, and it definitely seems to be resonating. We've talked a lot about the challenges these companies are facing, but what about the wins? Are there any specific companies that you think really embody this whole African business model we've been talking about?
Absolutely. One that immediately comes to mind is M-Pesa. They started in Kenya and have basically become the gold standard for mobile money platforms all over the world. They've managed to build this incredibly vast network of agents that reach even the most remote parts of the country, providing financial services to millions of people who never had access before.
It's like they created a whole new financial system from scratch.
Exactly. And they did it by understanding the local context, building real trust with consumers, and working hand in hand with regulators. Another great example is Flutterwave, this Nigerian company that's essentially building a payment infrastructure for the entire continent. They're making it way easier for businesses to operate across borders and really facilitating those transactions.
So they're breaking down barriers and creating connections.
Precisely. And they're really laser focused on things like security, reliability, and that overall user experience, which is so important when you're trying to build trust in the digital space.
It's really incredible to see these companies not just innovating, but also inspiring a whole new generation of entrepreneurs. There's this tangible energy, this feeling that things are moving in the right direction.
Oh, no, definitely. There's a ton of excitement and optimism for sure. But it's important to remember that this is still a relatively young sector, and there are still some major hurdles to overcome. We've talked about the struggles with profitability and navigating the regulatory landscape and attracting top talent. Those problems haven't disappeared overnight.
Right, it's not all sunshine and roses.
Exactly. But what's so encouraging is to see these companies facing those challenges head on. They're not shying away, they're finding creative solutions, they're resilient, and they're deeply, deeply committed to their missions.
It's about thinking long-term and building something that will last.
Absolutely. And it's about understanding that the real success of this African fintech movement isn't just about, the bottom line. It's about social impact. It's about giving people more control over their financial lives. And honestly, it's about creating a more equitable and prosperous future for everyone.
And that's a future we all want to be a part of.
This deep dive has been amazing. We've explored the incredible growth of fintech in Africa, the unique opportunities and challenges that come with it, and these inspiring stories of companies that are changing everything. Yeah, it's definitely been eye-opening, and I think it really highlights that this isn't just some regional trend. This is a global phenomenon that's forcing us to rethink how we view finance, technology, and development as a whole.
It's a good reminder that innovation can come from anywhere, and that oftentimes the most impactful solutions are the ones that come from within those communities themselves.
Absolutely. It makes you think, what will it really take for these African startups to truly become those African businesses? And what role will they play in shaping the future of the global economy?
Those are definitely questions worth pondering. And as this story continues to unfold, you can bet we'll be here to explore it every step of the way. Thanks for joining us for another deep dive, everyone.